Hello and welcome. You're watching us here on Trading Hour. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, Hormaz Patakia. We're in Christmas colors, as you can see, red, green, white. All of that happening. The market's largely in green with a few hints of red. What's actually perking up today are all these commodities-based names. So you have, Hindalco doing well. You have Hindustan Copper doing well. Alongside that, Hinzing doing well. But at the same time, the NBFCs as well, the bazooka that was delivered by the RBI yesterday when it comes to open market operations, the announcement that came in for 2 lakh crores and an additional $10 billion worth dollar-rupee swaps, all of that infusing about 3 lakh crore of liquidity in our markets has done well, not only for the banking names, but more so for the financials, which have already been on an up move, but continue their rally. For instance, something like a Shriram Finance, now up around 2.5%. In the broader markets, we are seeing traction in names like IIFL Finance and Manappuram Finance as well, which is further benefited by the rally that we've seen in gold prices. All in all, a decent day of trade so far, put on by the bulls in front of the Nifty on the back of a 3-day rally that we've seen already. So 26,200 and a little more and counting. Let's go across to Hormaz now with a spotlight on all these stocks that are buzzing around this hour.
Decent day for the markets, even decent for a lot of these broader market stocks as well. And JBM Auto is leading that pack. It's the top gainer on the Nifty 500 today, almost 11% higher on the stock. It's the fourth straight day of gains, the biggest single day gain in 3 months as well for this company. You have had close to 75 lakh shares that have been traded on the stock. The 20-day average is only 85,000 shares. So compared to the 20-day average, significantly higher volumes on JBM Auto. The stock has moved above its 50-day moving average and the 100-day moving average as well now, which was at 635. The next level on the upside is the 200 DMA, which comes at 643. So important levels to watch on JBM Auto. Has been an underperformer this year, down 16% so far despite today's up move, and is set for its first negative year after 2020. Now Manappuram, as Mangalam was highlighting, a lot of these commodity driven names, gold prices at record highs, 6th straight day of gains for the stock. The stock is also at record highs of its own, and the volumes today are the highest in over 2 months. Over 1 crore shares have already been traded in the first 2 hours of the session, and 20-day average is just 7.5 lakh shares. So moving higher on significant volumes, and the stock remains above its key moving averages. For the year so far, the stock is up nearly 70%, and it's turning out to be the best year the stock has had since 2019, when the stock was up 90% that year. And since we are in Christmas cheer, stocks like Sula Vineyards are reflecting that sentiment as well. And that stock too trading with gains of well over 7% as we speak now, extending its gains almost 8% higher on Sula. The biggest single day gain since June. It's gained in 3 out of the last 4 trading sessions, but had been an underperformer until then. 18 lakh shares have been traded on Sula so far. The 20-day average at this time of the day is less than 93,000 shares, so less than 1 lakh. The stock still remains below its key moving averages, and the stock has been, the underperformance has been such that the stock still is down around 36% from its IPO price of 357 rupees, Mangalam.
All right, thanks a lot for that. That's about a bunch of stocks which are buzzing around, but it's the IT pack which is on our radar. The US has announced major changes to its H-1B visa program, replacing the long-standing random lottery system with a weighted selection process. Rima joins in with more. Rima, you had earlier pointed out that this is a slight negative for the IT space, but from lows we've seen a recovery because perhaps the impact may not be as much.
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
Reema, thank you for that update there. Some of these IT names are recovering from the lows of the day, be it TCS, be it Infosys, and even Coforge, for that matter, has recovered slightly from the day's low. In fact, earlier we spoke to Kumar Rakesh, the India analyst of auto and IT at BNP Paribas, on the impact of these H-1B visa norms on the entire sector. Listen into what he had to say.
This change in selection process, although it dramatically changes the entire selection process, the impact would not be material. So net actually for the entire industry, we do not expect much of the impact. There are strong contingencies available. There is increased local hiring as well. A lot of these companies have done since 2017, and that will also pick up pace in the coming year. Investors have already started turning positive on IT. In the last few weeks, we have started seeing global investors also starting to look at IT services in a more sanguine way. And hence the setup from valuation perspective, under position in the sector for both domestic and foreign institutional investors, all of that suggests that it is a good setup for the sector. Add to that favorable macro data, which does indicate that sector should continue to outperform at least in the near term. Among the large caps, we like Infosys, first for their growth, but also their capability that they are building on the GenAI side in-house and strong partnerships that they have built. We like Infosys for that. Mid caps, we like Persistent Systems, strong execution, but more importantly, that is one company where we are already seeing benefits of GenAI reflecting in their revenue.
All right, let's talk about VIP Industries now. That's the stock that is on our radar. It's up around 5% this morning. There was a large trade on the stock. In fact, now as we speak, the stock is up 7%. The transaction with multiples has completed today. So Dilip Piramal has transferred 26% of his stake to multiples private equity, where around 3.7 crore shares or 26% equity changed hands in two block deals. Remember, it was in July 2025 where, the deal was first announced where promoters agreed to sell 32% stake to multiples and others at around 388 rupees per share. And as part of that deal, multiples also had to go ahead and announce a mandatory open offer for additional 26%. Now, as the norm has it, that the 26% worth open offer money has to be deposited in an escrow account for minority shareholders. So that is what multiples did. So they had their monies worth 26% deposited in the escrow account, and they bought 6% stake from Dilip Piramal in the first tranche in September. Thereafter, the entire minority shareholder sort of open offer got over, and yesterday they got the money back in their account. And the first thing that they did with that money is buy the 26% that was promised from Dilip Piramal, and that's exactly what happened. So in September, 6% transfer. Today, 26% transfer with all that 32% deal to multiples and others has completed. And after this, Dilip Piramal continues to hold 20% stake in the company. Importantly, now what we have to look at from here, the stock has been an underperformer, a rank underperformer. Before today's move also was below the offer price of 388 rupees. And now that the deal is done, at least the agreed upon part of the deal is done, all eyes will be on the turnaround strategy for VIP. The underlying industry is fairly strong. Can VIP regain its past glory, competitiveness and swift growth or not is something that the street will be watching out for, along with multiples' own investment tenure, any further capital investment that they do in the company, and any further management changes as well. Because from the announcement of the deal to now, the MD, Neetu Kashiramka, has also tendered her resignation. So that's about VIP. That explains the 7% move that we're seeing on VIP.
Doing well, VIP. Well, of course, as Mangalam highlighted, it's an underperformer to say the least. So, it'll be interesting to see what is the road ahead now for the company, with multiples now having a significant stake in VIP Industries. But the other mover today has been Vikrant Engineering, and the stock is surging because of the order that it won. 11% higher on the stock now. The order win size is almost equivalent to its market cap. Vivek is here with more details on that. Vivek, tell us more.
Well, that's right. A large order win coming from Vikrant Engineering, 11% higher among the top gainer as far as the broad end of the market is concerned. Good volumes as well. So, what is the order win? Like you mentioned, it's a large order win. Order worth over 2,000 crore. In fact, 2,035 crore. This is from Onyx Renewables, and this particular order pertains to EPC works that the company has to do for a 600 megawatt solar power plant execution. The total execution period will be over the next year. So, next 12 months is when the company will be able to realize the dues that it will get from this particular project. Now, this particular order entails execution of the project on a turnkey EPC basis, and the scope of work, remember, also includes supply of key components such as solar photovoltaic modules as well as inverters. So, large order win for Vikrant Engineering, keeping the stock higher in the session today.
Right, Vivek, thanks a lot for that. With that, we'll slip into a short break with the news that a couple of these stocks are doing well. Apollo, for one, the NSCI nod for merger comes in, and that's no observations from them. So, good going for that stock too. Take a short break, come back, focus on the bond market with Manisha Gupta on the other side.
India Bonds presents Bond Street.
Well, on Bond Street today, we discuss about the big moves that the bonds really seem to be making in the Indian markets right now. So when you look at the overall space, the Indian bonds have rallied the most in last 4 months. And this is after the benchmark 10-year yield bond have seen a decline of nearly 8 basis points there. This is the biggest decline, by the way, since 14th of August there. Now, RBI has announced measures to boost the banking system. And this is what we've seen reaction in sense of reaction to these bonds and yields there. So the RBI has put out also government bonds. It would buy government bonds and do foreign exchange swap therein. This is being done to calm the bond market bond yields there. What the RBI would do is that it would buy $2 trillion worth of bonds, 2 trillion rupees worth of bonds in 4 transactions over December and in the month of January. What the RBI would also do is that it would conduct 10 billion worth of foreign exchange swap for the month of January as well. If you look at 2025 so far, we have seen RBI inject nearly 6.5 lakh crores through various OMOs there. Now, this is the highest annual record that we have seen happening from RBI therein. Interestingly, RBI has had to step in because this has been quite a challenging year, really. Because one, you have seen seasonal factors. Second, it has been about the tax outflows. Then you also have seen RBI's forex interventions weighing on liquidity as well. Is the reason RBI had to continue to come into the markets to reinforce the impact of recent rate cuts as well. So, with all of those factors, is the reason that we have seen RBI come into the markets more often than and look at that big amount as well for 2025. But with that, let's go for a short break. When we come back, we'll talk more about markets and stock specifics.
CNBC-TV18 and India Bonds presents Bond Street.
Welcome back. Still around 30 points higher on the index and not doing significantly much as they continue to remain in a very narrow range. And some of these stocks that are doing well in the broader markets today, and Sula Vineyards, of course, we just spoke about that. And in line with Sula Vineyards, GM Breweries is also now surged to the highest point of the day, 9% higher now on the stock. Of course, Christmas cheers heading towards the new year as well. So all of these spirit names doing well for themselves in today's session. Sasken Technologies is another name, 8% higher on the stock, and Deccan Gold Mines whose rights issue is currently open for subscription. That too is up almost 8% in today's session. The other one, the big talking point in yesterday's trade was Cholamandalam, and that is after the company dismissed allegations by Cobra Post on irregular cash levels and suspected related party transactions and other issues that were flagged. Now listen in to what the management had to say on the analyst call that was held.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality, and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered, by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations. FY22 we started because the regulation also required, and we started including them. So that is they are playing on this regulatory a requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
The management of Cholamandalam there on the analyst call after the allegations that were surfaced yesterday. By the way, LG Electronics has now slumped to the lows of the day now, with the initiation coming in from Investec with a reduced recommendation actually from Avendus Spark, I beg your pardon. Avendus Spark has warned of a market share loss for the company, 1.5% lower on LG Electronics. But today being the Sensex monthly expiry, it's a good time to get in what the F&O trends are looking like. Mangalam has hopped across to the F&O desk, but Mangalam, it's been very range bound. Does the F&O data indicate a similar trend towards closing as well?
Well, that's what it seems like right now, but it is positive and consolidatory. That's the kind of stuff that we are getting in from the F&O space. Why do I say that? Because, the first couple of hours of trade, they've gone to the bulls. The market's been doing fairly well. The Nifty is up 40 points. From the lows, it's seen a recovery. The Nifty Bank is doing well. The advance decline firmly in favor of advances. Mid-caps doing well too. And the Nifty Bank, as we speak, is holding up, comfortably holding up above their 20-day moving average. The question is whether it closes above that or not, because it's been a bit of a, resistance sort of move for the Nifty Bank to stay above that 20-day moving average. Financials are doing well, so the RBI OMO helping not only the banking names but financial names in particular. Manappuram Finance further aided by better gold prices, IIFL Finance doing well, PNB Housing, and we have M&M Finance, all of them fairly well bid in trade. The other important imponderable to track right now would be how the IT index pans out, because remember, it's got a fair weight on the index. There was that news that came in the morning overnight about the H1B regulations. From lower levels, the IT index saw a bit of a recovery, but now is going lower once again. So where does that go would determine the course of action for the frontline index, for the Nifty itself, and whether it goes by and crosses that earlier high of 26,325 or not. Up until that happens, the street is bracing for a range. What is the range? 26,200 call writers, fairly active, premium of almost 115 rupees, telling you around 26,300 or earlier all-time highs, there would be some supply coming in. But the resistance has, there would be some resistance coming in, but the support has moved higher. So we have 26,200 put, which is also fairly well bid right now, around 70 rupees in premium, telling you that the support has moved higher from 26,000 to 26,130 right now. So that would be an important level to mark out for. A lot of stocks on our radar. We have Bharat Dynamics, which is seeing a lot of short covering, and we also have Hind Zinc, which is seeing a lot of long positions added, understandably on account of the big move that we saw on silver.
Indeed, a lot of these commodity plays, right? Hindustan Copper, Hindustan Zinc, all of them doing very well. They continue to do so. Hindustan Zinc has now gained in 10 out of the last 12 trading sessions. and Hindustan Copper too trading at the levels last seen in 2010. So it's the kind of moves that you're seeing in a lot of these metal names. Jay Thakkar from ICICI Securities joins in for a quick chart check. Jay, good morning. Thank you for joining in. Well, you're seeing at least some bit of consolidation now on the index. So what's your call here? Do we continue to move higher slowly but steadily? And your stock recommendations as well for the morning.
Hi, good morning to you, Urmas. And see, we have seen a good breakout coming back in Nifty above the levels of 26,000. I mean, for this entire December series, Urmas, I would say that 26,000 strike has been quite active. Okay, among relatively other strikes, because below these levels we have seen Nifty slipping into the consolidation of 26,000 to 25,700, which has acted as a very critical support, 25,700. And about 26, on most of the occasions we have seen the index bouncing back or inching towards 26,300. A couple of times we saw Nifty creating that lifetime highs also. Now, the kind of put additions which we have seen now at 26,000 strike, about more than 1.5 lakh contracts, and rather we have seen more addition today in 26,200 strike as well. Clearly indicates that Nifty is heading towards 26,400 to 500 zone in the near term. I think the overall trend should be positive. Of course, Nifty IT is looking witnessing some selling pressure now after a good rally coming in last month as well as this series, both series. So Nifty Bank has been a relatively underperformer, or maybe it's consolidating within this band of 59 to 60,000. IT moved up, bank went sideways. Now maybe IT is correcting a bit, and a bank would lead from here on and maybe inch towards 60,000 plus levels. So is what I'm expecting, and hence private sector bank should be back. FI net shorts have reduced from 1.66 lakh contracts to 1.34 lakh contracts since past 3 days, which is also positive. So I think that overall, looking at the index net shorts of the FI, which started covering, and Nifty trading about 26,000, I think that it's heading towards 26,400 to 500 levels in the near term. And we have seen stock specific short covering happening since past 3 to 4 trading sessions, maybe public sector stocks or maybe most of the beaten down names, wherein there were huge shorts. So that clearly indicates that until the monthly expiry, that is next Tuesday on 30th December, till then this short covering should continue, and probably we are seeing this pre-budget rally. Now within the stock ideas, I think Ultratech Cement from these levels looks really positive. It can inch towards the levels of 12,200, 12,500 in the near term. So there we are bullish. One can place a stop loss below the levels of 11,600 and go long on Ultratech. And secondly, Indus Tower looks positive from current levels. We have seen the telecom stocks or overall sector relatively positive in the near term, and there has been positive sentiment out there in any stock related to telecom. So Indus Tower, I think, almost is heading towards the level of 440, 440. At least in the Jan series is what we would likely see these levels. And on the downside, 410 is a critical support. So with that as a stop loss, one can go along on this. As a disclaimer, we would like to say that this we might have recommended to our clients, and our clients might have a position in this, but I personally do not hold any position in these stocks.
All right, Hormaz just spoke about LG Electronics. Jay, just stay with us because while LG Electronics, the brokerage believes that there could be some sort of market share loss, could the market share come to Voltas? That stock's moving higher. Voltas has moved to the high point of trade. And another Tata Group stock is Tata Power. I don't know, what's happened to this stock. It's been consolidating this entire year. The move has been just 4.5%. Typically, such kind of consolidation, if you pull out, longer term chart as well, this month, 4.5% over the last 12 months, just in that 377 to 415 sort of range. Typically, Jay, when such a long consolidation happens, it is followed by a big move on either side. Do you sense the same for Tata Power?
I think so. See, Mangalam, first of all, good morning to you. And we have seen the power sector overall being one of the underperformer, and is one of the place wherein, or one of the sector wherein we have seen the FI outflow in calendar 25. So that's been one of the highest, biggest decline is what we have seen, or biggest consolidation is what we have seen in this year as far as relative to other sectors is concerned. And power stocks or power finance stocks, Mangalam, if you see, maybe REC, PFC, I mean, they have started seeing or witnessing short covering. Now, there were shorts added there, but as far as Tata Power is concerned, we haven't seen more of the decline because of short buildup, but it is more because of long unwinding. And relatively now, the the open interest or the leverage now in the future segment as far as Tata Power is concerned is relatively quite low, and the stock has been taking support around the levels of 370-60 zone, which is the lower end of this range. So yes, as you said, if at all we are seeing short covering in the power finance names, and if if Nifty bounces back from these levels, I think power stocks would perform from here on, might see some long build-up or short covering, because of which we can see Tata Power can inch towards 430, 440 levels in coming series as well. And budget around the corner, we have seen those stocks which were not participating, Mangalam, have now started to participate.
All right. Thanks a lot for that. We'll take a short break, come back, discuss market fundamentals with Shahzad Madon from TCG Asset Management.
Welcome back. Continuing our conversation on the markets, Shahzad Madon from TCG Asset Management is now joining in. Shahzad, good morning. Thank you for joining in. Compliments of the season to you and your team as well. I was looking at your holdings. We spoke about DV Corp the last time you were here. We also spoke about Intellect Design. Equitas Small Finance Bank is another one, right? It's among your top holdings. With a lot of these major mega deals that you have seen in the financial space, now, do you believe that these small finance banks also now are next in line to become the larger banks, as the way AU Small Finance Bank has now graduated to become a large one?
Sure. So firstly, good morning, Hormaz. Thank you for having me on your show. Wonderful to be here. And season's greetings to yourself, all your team, and all your viewers. So regarding Equitas Bank, our perspective on the stock is as follows. This is a very good quality bank. A lot of the book is secured. There was an element of the unsecured part which was obviously under stress over the last, let us say, 15-ish months. To our mind, the worst appears to be behind in the MFI space in general, and in particular also for this bank. Consequently, our view at the current valuations, which are very reasonable relative to whatever else is available in the market, as well as to its own history, there is a good story. Things should go well. And, just again to remind that the MFI portion of this book is rather small at this point in time. The bulk of it is secured in terms of the NPAs, very, very much under control. So look forward to good growth going forward. I must mention here, what you mentioned, the way we're seeing it, we're not seeing it in terms of that there could be some potential corporate action. This is the way we see it is strictly from a perspective that this bank merits on a standalone basis a place in our portfolio.
All right, on a standalone basis. I just wanted to understand a little about, your investment in DB Corp, because newspapers, one wonders whether, that's a space to be in from a growth standpoint, with the digital areas not yet as sound in terms of cash flows, despite the growth coming in.
Well, hi, Mangalam. So let me touch upon this. The newspaper industry or the newsprint industry, firstly, the newsprint industry in general is a winner-take-all industry in the sense it's in a bit like a platform space. So when you look at DB Corp, they are dominant in certain geographies and in the Hindi heartland, also in Gujarat, Punjab, in addition to whatever is there. Threw up a lot of cash, so cash flow positive, strong cash flows, cash on the balance sheet, fairly good ROE. That's one part of the business. That part of the business continues. You've seen even over the last 5 years, which includes the COVID period, a very difficult period, you've got an earnings growth which is low single digit. You have a high dividend yield of roughly 6%, but that's not the story. The story comes now. When you look at DB Corp, what's happening is they've invested very, very heavily in the digital space. They've got wonderful digital assets. I'm not sure how much you are aware of it, but that's one part of it which is going well. That's the job. It's all expensed through the P&L. But the very interesting thing is what's happening going forward. When you look at the, let's say the media industry, one of the things is, okay, let's put it this way. Let me change it. If you need any information, what do you look for? You go to Google, you search for something. And you go and read a news article written by somebody else. Who gets the advertising dollars? As yet, it was the search engine. But things are changing. Even in India, at this point in time, search engines have to pay the content provider. You actually seen that happen. There is legislation in most countries, even in smaller countries like Indonesia, etc., where there is a lot of legislation on this front. That said, you're going to see even on one more front, on the AI front. Just recently, TPIIT put out a discussion paper where they're talking about that. What do AI models use? AI models use content from underlying agencies, including yourself. The agencies need to, the content provider needs to be paid the compensation. So the way we see it is as this, and that's some part of the way we invest, is that we're looking at companies available at reasonable valuations with a reasonable growth outlook and an optionality. And in our view, what's priced in is exactly what you said, that the industry is growing nowhere. That's why the stock is available at the valuations it is, which is very, very cheap. And the way we see it is that there is potential upside on account of what's happening on the entire, call it the AI space, as well as what's happening, like the search engines have to provide the content providers compensation. So our sense makes good value, offers good value to us.
Shehzad, one of your higher allocations in your portfolio is auto and auto components. Now, where among it does your preference lie? Is it auto or is it auto components? Because I see SJS as part of your holdings, I see Carraro as part of your holdings, ZF Commercial. So your tilt is more towards the auto ancillary space. Now, does that mean that since the outlook for the industry is good, there are some reports about the CV cycle turning as well going into next year, does that keep you bullish on a lot of these auto ancillary names for going forward as well?
Hormaz, we are bullish on auto and auto ancillary. In this portfolio, specifically because every portfolio is managed to a certain mandate, we're looking for certain types of stocks, as the name suggests, the transformative growth type, which are typically some of the mid-ish cap companies where we believe have outsized growth potential. So there is the auto angst written. On all three of them, we do believe when you look at what they've delivered in the past, as well as what's the outlook for the future, right? For all three of them, we are, I would say, optimistic. We believe that they offer very good value. Just add, in some cases, like in ZFCV, you also have the upside of, again, regulatory tailwinds. You would be aware that there is, let's put it, for commercial vehicles, right? You are over by FY 2027, you will have norms which mandate that you need to have greater amount of safety systems. Now, what that means is a higher amount of ticket size for ZFCV. In Carraro, another very good company which we've seen, the way we saw it is post IPO, which is a very recently listed IPO. Stock is corrected meaningfully. Valuations are very reasonable. Benefits significantly from the tractor upcycling, and more specifically in the tractors, it's in the heavy HP tractors where it makes transmission as well as the system. So makes a lot of sense to us. Both the stocks, SJS is of course doing very well in the in the aesthetic space, also expanding and being one of the let us say star performers over the last few years, and we expect these companies to do extremely well, and that's why they find a place in our portfolio.
All right, Shehzad, thank you so much for joining in and explaining the rationale for a whole host of companies on your portfolio, stocks and sectors to bet on. Wish you, your team, your investors and your family a very happy new year and season's greetings as well. Take a short break, come back, more on the markets on the other side. Welcome back. The market's holding up right now, though we're marginally off the highs. The Nifty is below that 26,200 mark. Be very interesting to see what are the sectors that are causing that sort of decline. Is it the Nifty Bank? Pull up the Nifty Bank right now, and pull up the IT index as well. Both of them currently it's the Nifty Bank, which has now gone closer to the 20-day moving average once again, and the IT index too has gone closer to the lows of trade so far. So those are the couple of engines which have dragged the Nifty lower. And the third wheel would perhaps be Reliance. Let's pull up the intraday chart of Reliance and see where that one goes as well. So, if Reliance too is at the low point of trade, understandably, we are seeing, the Nifty move lower as well. So the Nifty Bank has seen a bit of a knock. We've seen the IT index go back to morning lows and Reliance. So all three big weights of the frontline index currently lower. The Nifty Bank now perhaps is below the 20-day moving average as well. And the IT index too, around the 38,900 mark. But we spoke with Mark Mobius earlier, the chairman, Mobius Emerging Opportunities Fund, on the AI theme, Indian software and hardware companies, the Indian market, as well as his outlook for 2026. Hear him out.
AI has been pushed and pushed and pushed by so many people that it's quite bubble-like territory. But at the same time, you must remember that AI is here to stay and is expanding. More and more people are adopting AI systems. I myself, I'm using AI almost every day. So there's no question that the AI revolution is here to stay and will continue. But some companies have been emphasizing their AI expertise, and that really may be a little bit too much. Some of these companies are not really into AI directly. And so I think we have to watch it and pick and choose those companies that are really into AI systems and developing AI. Where we would want to focus is on the software companies as well as the hardware. In other words, computer hardware companies, which I think will be growing at a very fast rate going forward. Now, of course, many of these are not listed yet, but as we go forward, this will be a good development area. Well, I think a company like Infosys is a very good company. I'm looking at companies that are doing the hardware for Apple, companies that are not yet listed but are going to be listed going forward. That would be a very interesting area to develop. As far as we're concerned, India is number one. It's the most important market in emerging markets, not only because of its size, but because of the youth of the population and because of the developments that are taking place in India that will be revolutionary, very, very important.
Welcome back. 2025 has been a landmark year for GST in India, characterized by sweeping reforms, simplified tax slabs, stronger collections, and a major shake-up in how tobacco and sin goods are taxed. Timsy Jaipuria has the details on what has changed.
Well, let me take you back to Independence Day 2025. Since Prime Minister Modi took charge, he's reserved his 15th August speech for some big bang announcement. And this year was no different.
मेरे प्यारे देशवासियों, हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं. ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे.
The Finance Ministry went into hyperdrive after this, and Finance Minister Nirmala Sitharaman was able to deliver on what industry had been demanding for years: a simpler, cleaner rate structure, much ahead of schedule. She announced the changes on the 3rd September and set the 22nd of September for the biggest GST rate rationalization since the tax was launched in 2017. The old 4-slab structure of 5%, 12%, 18% and 28% was the first to go. In its place, we have a simplified 2-rate structure, a merit rate of 5% and a standard rate of 18%. We also have a special rate of 40% applicable only on sin goods. Of course, this meant a ton of goods had to be moved to new rates. So many key commodities like butter, ghee, biscuits, pasta, namkeen, etc., especially those categorized as basic and essential goods, were brought under the 5% slab. Remember, many of these were earlier taxed at either 12% or 18%. Goods like cement and paints, which were classified as standard goods, were moved to the 18% bracket. Most services remained to this rate slab. A major category here is basic four-wheelers and two-wheelers. These have been brought down from the 28% plus cess bracket to 18%, making them more affordable. Similarly, a bunch of consumer durables like TVs, refrigerators and washing machines have been moved down to the 18% slab from the earlier 28% slab. The council also cleaned up the list of items in the luxury, sin and demerit goods category. Now this list is limited to a few items like aerated drinks and luxury cars. So in the case of aerated beverages, the tax incidence has been kept the same but made simpler. Instead of 28% plus cess of 12%, these attract a flat 40%. Similarly, luxury cars also attract a flat 40% GST instead of the earlier 28% plus cess. Medicines were the other big impact area of this exercise. A host of drugs were brought down from 12% to either nil or were zero rated. This made these drugs cheaper. GST on essential services like health and life insurance premia has also been brought down from 18% to nil. So that's the much needed relief for these insurance customers and a long-standing demand from both the populace and industry. The government's confidence in pushing through and implementing this major reform came from two sources. One is the fact that there was a need to re-energize the consumption cycle. The other was a trend of strong GST collections, which were averaging at nearly 2 lakh rupees a month for most of the financial year. As you can see on this chart, there is a slight dip in the number announced at the beginning of December to 1.7 lakh crore rupees. This is the first collection where the full impact of GST 2.0 was felt, and the government is of the opinion that it is still indicating overall GST revenues as remaining robust. And so that's a strong sign that the simplified slabs, a rise in consumption due to cheaper goods, and improved compliance under GST 2.0 are helping sustain tax buoyancy. But there is one area that's yet to see a change in slabs, and that's the levy on cigarettes, tobacco products and pan masala. The GST Council had held off making any changes to these products as the compensation cess these brought in was still being used to pay off the loans taken to compensate states for the losses due to COVID-19 pandemic. Currently, these goods attract 28% GST plus cess. But we do have some clarity on how these will change once the loans are repaid. According to two bills introduced by the government, the Health Securities and National Securities Cess Bill 2025 and Central Excise Amendment Bill 2025, the government plans to replace the quantum of compensation cess levy on cigarettes, cigars, gutka and other tobacco products and pan masala. Under GST 2.0, these products are expected to fall under the new demerit slab of 40%, and the gap in the tax incidence will be made up by the new taxes. On pan masala, for instance, tax will be 40% GST plus Health Securities and National Securities cess. On cigarettes and other tobacco products, we are looking at 40% GST plus a higher rate of central excise duty. Effectively, this will retain the overall tax incidence on these products, preventing any sharp drop in government revenues while keeping prices steady. So, for the Goods and Services Tax 2025 has not been just a year of routine tweaks. It's been a year of evolution into a leaner tax with simpler slabs, stronger collections and sharper enforcement, while keeping consumer prices in check and setting the consumption cycle rolling again. In New Delhi, Tim C. Jaipuria.
All right, MC, thanks a lot for that. Well, not particularly great news for the market from a bull standpoint as we moved off the highs, and the Nifty Bank too is back below that 20-day moving average, the mid-cap index, which is right above my head, in mild red right now. Whether this dip gets bought into or not is something that we will leave the team of HTR or Halftime Report to decode.